Okay, can we talk about mortgage rates for a second? Because if you've been watching the news lately, you've probably noticed that they're all over the place. One day as rates are dropping, the next day it's rates surge to a 3-month high, and we're just over here trying to figure out whether now is a good time to buy or if we should just build a hut out of credit card statements and call it a day. So if you're feeling stuck, confused, or just plain exhausted by the whole mortgage roller coaster that is 2025, know that you're not alone. Today I'm breaking down why rates keep swinging like your uncle's mood at Thanksgiving, where rates might be headed this year, and how you can still win in this market even if rates never hit 5% again. Sound good? Let's get into it. Hey, if we haven't met yet, I'm Asher Benjamin. I'm a loan officer, former teacher, husband, dad of 3, and someone who still says the rate is the rate at least 10 times a day. I've helped hundreds of families and investors navigate this market, not just in the easy times, but in the crazy ones too. 2020, 2022, yeah, I was here before rates were 2.5%, and I'm still here even after they essentially tripled overnight. But what I've learned is this: you don't need perfect rates, you need the right strategy. And that's what we're gonna talk about today. All right, so what's actually driving mortgage rates in 2025? Let's break it down. Rates are basically controlled by a few key players. Inflation data. If inflation cools, rates usually follow. But if prices stay hot, rates go up. The Federal Reserve, when they raise or lower their short-term rate, mortgage rates react, but it's not always in the way people expect. Mortgage-backed securities, otherwise referred to as MBS. That's when investors are buying. If demand drops, rates rise. If demand goes up, rates improve. The jobs report. A strong jobs market can actually be bad for rates because it means inflation might stick around. Global drama, wars, oil prices, elections, it all adds volatility. Investors panic and rates react. Rates aren't like a thermostat. They're more like your friend who just got dumped. One little thing sets them off and suddenly we're in a tailspin. Now let's talk predictions, because I know that's what most of you really want. Most experts, Fannie Mae, MBA, Freddie Mac, they're expecting mortgage rates to gradually improve throughout 2025. Translation, we might see rates in the mid to low 6s this year, maybe even if the high 5s if inflation cools down more and the Fed cuts rates a couple times. But, and this is important, mortgage rates don't always move with the Fed. They move with investor expectations, bond markets, and emotion. Yes, rates are basically the teenager of the financial world. Plus, it's an election year, which means volatility, uncertainty, and lots of bold claims and commercials. Instead of stressing over where rates are going to land, let's shift the question to how can I make a smart move regardless of the rate? And that's where strategy comes in. Here's how buyers are still winning. Even when rates are higher than they want them to be. Strategy number 1, date the rate, marry the house. You've probably heard this 1,000 times before, but it still holds up. If the monthly payment works for you now and the house fits your needs, lock it in. You could always refinance later if and when rates drop. Waiting for perfect usually means missing out on equity growth and home appreciation. Strategy number 2, seller paid rate buy downs. I love these. You negotiate with the seller to cover a specific portion of your closing costs, specifically to buy down your rate. There's the 2-1 temporary buy down where you get to lower the rate for the first 2 years. There's permanent buy downs where you lock in something more affordable long term. It's like putting your rate on sale without needing to time the market. Strategy number 3, adjustable rate mortgages or ARMs. These aren't the villains they used to be. If you know that you're going to move or refinance within 5 to 7 years, an ARM can offer a significantly lower starting rate. Just make sure you understand the adjustment period and worst case scenarios if in fact you don't move or refinance within that 5 to 7 year window. Strategy number 4, creative structures. I've helped buyers partner with family, split equity, use gift funds, and even structure DSCR loans for investors. There's more options than you think out there. You just need someone who knows the full playbook. Now, if you're a homeowner watching this and thinking, should I refinance right now or just hang tight? Here's what to know. If you're sitting on 3% or lower for your interest rate, you probably shouldn't refinance until you're doing it to consolidate debt or pull cash for something worthwhile. If your current rate is 7% or higher, it might be worth looking at a refi to a better product, even an ARM. Cash out refinance, yeah, the rate might be higher, but if you're drowning in 20 to 30% or more interest on those credit card debt, you could still save hundreds of dollars each month and lift a big weight off your shoulders in the meantime. HELOC. This is a great option if you want to access equity without touching that beautiful 2.5%, that 3% interest rate on your first mortgage. And whatever you do, get your credit, income, and docs ready. When the window to refi opens, the prepared borrowers move fast and save the most. So to recap, yes, the 2025 mortgage market is a roller coaster, but you don't have to be the person who just closes their eyes and hopes for the best. Understand what's driving rates, stay flexible, and lean into strategy over stress. Whether you're buying your first home, refinancing, or planning an investment move, there's always a smart option on the table, even when rates feel a little wild. And if you want help staying in the loop each week, I actually put out market updates every Wednesday right here on this channel. I break down what's happening with rates, housing market, Fed decisions, job report, all in plain English with no fluff and no hype. So if you want to be the most informed buyer, agent, or investor in your circle, hit the subscribe button, turn on notifications, and check back every Wednesday for your latest updates. If you want help figuring out your best path, shoot me a message, drop a comment with your biggest mortgage question, or book a free strategy call. I'm Asher Benjamin, thanks for watching, and I'll see you in the next one. And hey, don't forget to watch this week's update on Wednesday. See you there.